Welcome to Shri Management channel. Today I'm going to show you how to calculate gross annual value of rental income in case of let out properties. Let's take an example, then have a look at that example. How do we calculate gross annual value and how do you calculate net annual value? That will be helpful for you when you are filing income taxes. And also at the end of the video, I would show you how to use online tax calculator, which was provided by Income Tax of India website. So if you watch till the end of the video, you get how to use that automatic calculator to your benefit so that you can simply calculate the taxes easily for income from house properties. So let's deep dive. So here is an example about an house which has been let out throughout the previous year. And the municipal rent is the one calculated from the municipal authorities. And then the value of the fair value is something similar house in the same area would have received so much amount of rent on the annual basis. And the standard rent, which was calculated by Rental Act, is 1,20,000 per annum. And the rent received from the property is 11,000 per month. And there is an unrelated rent of for 1 month of around 11,000 rupees. And the taxes paid is 10% of the municipal valuation. And then there is a borrowed loan for the purpose of the house, and the interest paid during the year is 40,000. So let's see how do we calculate the gross annual value basing on these inputs. So taking from that example, we need to calculate the expected rent first. The expected rent is the higher amount of the municipal value and the fair value, but it is restricted to the standard rent. So from the example we have seen, the municipal value is coming to 1,30,000 rupees and the fair value is 1,10,000. But there is a restriction that the higher limit it cannot cross the standard rent here, which is 1,20,000. So out of this calculation, I arrived at the expected rent of 1,20,000. And the actual rent received, this we have to calculate by multiplying the monthly rent. So in the example you have taken, the monthly rent is 11,000. So we multiplied that by 12, it's coming to 1,32,000 rupees. Out of that, I told that around 11,000 rupees is unrealized rent. So I have subtracted from that. That gives us the actual rent received during the course of the year. And when we compare that actual rent to the expected rent, uh, we need to consider which one is higher. So the here the actual rent is 1,21,000. And that's coming to the next step here is to calculate the municipal taxes. The municipal taxes is, as I told, it's 10% of the market value. The market value in our example is 1,30,000. And basing on that, I have subtracted the municipal taxes paid from the from the comparison what I've done from expected rent to the actual rent. So it is coming to 1,08,000. So we have to subtract the municipal taxes paid. That's the deduction which we can carry forward. And we arrive at the net annual value. So the net annual value is municipal taxes taken out of gross annual value. And from the, in case if the taxpayer is following the old tax regime, that means the optional tax regime, whatever we call, then there is 30% of standard flat deduction on the net asset value. So I calculated 30% on 1,08,000, that is coming to 32,400. And as I told in the example, there is a borrowed capital, and then for which the interest is paid of 40,000 on the annual basis. Unlike in the case of self-occupied properties, because the let-out property, there is no ceiling limit. So whatever is the interest paid for the home loan can be considered for deduction. So the deduction comes to subtracting 32,400 plus 40,000 out of 1,08,000 gives us to 35,600. That is the income from the property. So let's look at the same example from the tax calculator, which is provided from the Income Tax of India website. So I have just opened the Income Tax of India website, and then here if you see, there is something called tax tools. You can click on view all, and This would take you to the search page. Here you can enter the house property and then search for the tax calculator. This tax calculator is available from Income Tax of India website. So you can use that when you are really calculating the net annual value. I'll show you using the same example. So if you scroll down, here is the income from the let out property. When you click on calculate, this will open up providing additional details like rent, annual rent, market rent, standard rent, municipal valuation, so on and so forth. So looking at the example we have, this is having a municipal rent, fair value and everything is given. So let's fill in this into the standard tax calculator. Here, the annual rent is 11,000 into 12. So the annual rent is coming to 1,32,000. That's what I enter here. And in case of market rent, which is a fair value, is 1,10,000. And the standard rent is 1,20,000. And the municipal valuation of the property, what I call the municipal rent here, this is the municipal valuation from the municipality. And there is an unrealized rent of 11,000 in the example. If you see here, this is the example. There is no loss due to the vacancy of the property. And the municipal taxes which are paid are 40% of the valuation of the municipal valuation. So if you look at our example here, this is coming to 13,000. So I'm picking up this directly. So if you see, automatically the net annual value is calculated. So we also received the same amount of value when our calculation. And if you scroll down, the standard deduction of 30% of net annual value is also calculated. We need to just input the home loan interest, which is 40,000 in our example. So if you enter that, it will come to the total income from the house property, which is exactly the same, whatever we see in our calculation. So it's very simple, and then feel free to use this calculator. And also I'll provide the link of that Excel in the description so that you can really play around with the values in case if you're filing taxes on your own or you are filing taxes for somebody else. Thank you for watching this video, and in case if you have any questions or comments, do post them. Of course, don't forget to subscribe and share this video with somebody else. Thank you.